There are plenty of big questions facing the global economy at the moment, from US interest rates to the state of the Eurozone to a hard landing in China. Joining me now to discuss some of them is James McCormack, Head of Sovereign Ratings at Fitch. James, thanks for joining us.
Sure.
I guess the first big question is September. Are we going to get a rise at the Fed?
We think so. That's been our call for a while, although some of the evidence more recently would suggest that maybe that'll be delayed until December, but we think it's coming. We think the next Fed move will be a tightening. Conditions are already tightening based on a stronger dollar, but we think there's a desire on the part of the Fed to begin the normalization process more formally. So we are looking for an interest rate increase in the US in the not too distant future.
I mean, I guess the question marks came because of what happened in China and the knock-on effects that had around the world. Was that a sort of false alarm, do you think?
Not for China, and not for some emerging markets. But I think from the Fed's perspective, the focus is always going to be on U.S. economic conditions, the growth outlook, which is reasonably robust in Q2, was reasonably robust in Q2, and the employment picture looks quite good as well. Inflation is a little bit low for considering a rate hike, but I think when you kind of roll in all the effects in the U.S., it looks to us at least like it's ready for a rate hike.
So should we be worried about China then?
Seems to be plenty to worry about. I think the country is going through pretty major transitions, one to a slower growth trajectory, and I think the sources of growth are changing as well, moving away from manufacturing and construction towards services. And services is actually growing very strongly. In the first half of the year, it was 8%. And we think that's supporting employment as well. So there is a transition going on to a different growth pattern. It's a little bit weaker than the previous growth trajectory. And the second big transformation which is going on is a reduction in debt levels. And obviously that is not going to be a linear or necessarily a completely smooth process. So there will be bumps along the way, there will be hiccups, but those two transitions are underway and they're important for the medium term.
There's been talk about a new Asian crisis or a new emerging markets crisis. I'm guessing if you're sitting in some countries, it doesn't feel looming or pending. You're in the middle of it. I mean, how serious are the problems facing emerging markets?
Well, we're quite reluctant to use the term crisis at this point because we've seen some volatility in equity markets, we've seen some volatility in the FX markets, but the debt markets have actually been pretty calm, and we're not really seeing challenging, I mean, there are growth challenges, but we're not really seeing major reductions in our growth projections going forward. There's lower commodity prices, lower global trade, a weaker China, higher interest rates in the US, so plenty of issues that look to be challenges, but not ones that we would consider to be ingredients of a crisis.
And will higher US rates maybe change that dynamic?
Well, it does present central banks in emerging markets with potentially a dilemma of potentially raising their own rates into weaker growth, and that's something that each country is going to have to figure out what the best adjustment path going forward. Do you leverage off stronger growth in the US, or are they affected more by weaker growth from China?
Are there any countries that look particularly vulnerable? We had the sort of fragile five a couple of years ago. Are we still looking at the same countries?
It's countries that have large external funding needs, and some of those were part of the fragile five. But it's also, Turkey is a country that's been exposed. South Africa. It's countries with current account deficits that rely on international capital markets for funding, and we've seen adjustments in those currencies. Malaysia as well, in this part of the world. And we'll continue probably to see pressure on those ones going forward.
We sat here and we had a very similar conversation a year ago. Since then, the US is growing faster, China is growing more slowly. Is the state of the global economy, is it getting better or worse?
It's much the same. With as you say, the U.S. a little bit quicker, China a little bit slower, and Europe somewhere in between without much change. But the issues that were at play a year ago are still at play. It's divergent monetary policies with the U.S. moving towards tightening, Europe in easing mode, Japan in easing mode, and I think that we expected volatility to come with that, and we've seen it.
But no reason to panic?
Not yet.
James, thank you very much for joining us.
Thank you very much.
And you can read plenty more on all these stories at ft.com/global economy.